What many people don't know is Paul has a white suit like Travolta wore in that movie. He used to wear it on stage at the seminars with the big collar and the open buttons and the big shiny gold Star of David, Mug David, as they call it. Anyway, the Royals are an absolute definite threat for the Mets. I know a lot of um, people are just saying the Mets are going to walk in here, and I am a fan, and I do believe that by far they have the best bargain in baseball with DeGrom making 500 grand. Ridiculous. Did you know he was originally a shortstop? He didn't start pitching until he was like 27, which is really weird. But the Royals, they're very good at winning. They're very good at base running. I think it's going to be a great series. I don't think it goes quick. I'd like to see it go quick. I'd like to see the Mets win. I'm not a fanatic, but I've always liked the Mets more than the Skankies. But Casey is a definite threat. You know, not rooting against the Mets. I like the Mets, even though basically my arch enemy is a huge Mets fan. So you would figure that I would hate the Mets, but I don't. I do like them. It's the team I rooted for growing up. Now I just really don't care because more important things to worry about than rooting for a sports team. All right, but that's just my 2 cents. All right, so Monday morning at 5 a.m. if you want to wake up, the German IFO business climate, and then the Buba monthly report. New home sales in the United States. On Tuesday, core durable goods, consumer confidence during the session. Wednesday is the FOMC statement. I believe the meeting starts Tuesday. Is that true, Paul? All right, it's a 2-day. Right, I didn't look, but I assume it is. Doesn't matter. The statement day is.
Yeah, yeah.
And I do not feel they're going to raise rates. I know Paul doesn't feel that way either, but I'll let him tell you about that himself. Thursday, advanced GDP, the weekly unemployment claims. Lockhart speaks. What's he going to say? Who knows? Pending home sales. Then Friday, another red, which is the employment cost index. Chicago PMI after the open. Williams speaks after the open, and revised University of Michigan consumer sentiment after the open. So it's a pretty busy economic report week. It's also a busy earnings week with Apple reporting, also names like Twitter. They're going to be coming out. Google reported last week, had a big gap up and a sell-off, but not a bad sell-off. It's still closed higher than it closed the previous day, just a sell-off from the open. So now the question moves to what is going to happen in the market here. I mean, you had some really big deals this week, right? You had the S&P over the 200-day. You had the Dow above the 200-day. You have the Nasdaq a whisper away from new highs, right? The Q's a whisper away from new highs. And you really have the S&P about 3% away from new highs, which coincidentally is about what the Russell has to get to its 200-day. So that would be strange, huh? If the Russell just makes, if they both move in tandem and the Russell just makes it to the 200-day, while the S&P actually gets to a new high. I don't know. Scott says he's concerned about a wolf wave. If you knew what a wolf wave was, I'd be surprised. I actually bought that course. It was a lot of money from, I think his name was Bill. I don't remember. But I never really put it to work. But it is hysterical because when you do see examples, they are pretty wicked. The wolf wave is pretty wicked. But I spent a lot of money on that course, and I couldn't even tell you the first thing about it. Plus, like they make you sign an NDA and everything. He's nuts, man. That guy. Anyway, that's all I got for now. Is the S&P Dow over the 200-day good? I want to see a little more of positive action or neutral action as a stepping stone, but doesn't mean we're going to get it. We are certainly really on a nice wicked move here. The short-term momentum favors the upside, but it also puts us at short-term overbought. So that's definitely a concern as well. That's it. Turn it over to Paul. Paul, please text me when you're done. I have to do the video for the inner circle anyway. So please text me when you're done. Thank you.
Yeah, later.
I have to make your thing so you can see the questions again. All right. You're good.
Go for a little while. Okay, I guess you're done. All right. Let me just get partially comfortable. I don't think I ever operate at 100% and be normal, but I'm a little under the weather. So forgive my lack of my normal enthusiasm. We had our annual Halloween party for kids today with wall and felt really, really, really crummy. So I don't feel that great now. And I'm hopefully going to get a really good night's sleep. I coached Friday night. It was 45 degrees for my daughter's game. It was cold. I had 4 layers on top. I had gloves on. Thank God it was an easy game. They went up 10-0, and my daughter threw a perfect game for 3 innings, and then I made her sit on the bench because I felt bad for the other team. And then my son had 2 games over the weekend, and one was in the rain today, and my middle guy had to officiate his swim meet, so it's been one of those, you all know when we chase around our kids. In any case, so I don't feel that great, and I am going to try to get through this with some limited mental faculty capacity. So let's go. A huge week for the Bulls. It's inarguable that it was a huge week for the Bulls. I guess I continue to scratch my head at people who disavow the rally, but we've seen this action since 2012, really, that they keep disavowing the rallies, and the rallies keep going higher, blah, blah, blah. I talked about this move we're having right now the week we had the crash in August. I said this is how fourth quarters of bear markets begin. You have the correction. The whole world gets negative, which we saw, and then we go right back to all-time highs, which we're doing right now. So nothing has changed. I am as comfortably positive on the bullish side as I've been all along. I do think we're going to all-time highs. Does everything go to all-time highs? I would be surprised. And what I'm repeating essentially what I said since the end of August. So I think we're going to all-time highs. I feel pretty good about it. I think the Dow's going to 20. Feel pretty good. Well, I'd be an idiot to say I feel pretty good about that, but I think the scenario is unfolding as I thought, especially with the dollar strengthening this week. So I guess, the only thing that really surprised me, I was surprised just how good sector leadership has become. That I didn't think was going to happen, but it's a pleasant surprise. On the downside, it's really hard. I mean, I'm pretty active on Twitter, and I follow and engage with some people who have, tens of thousands of followers or hundreds of thousands of followers, a lot more than I do or ever will. And a lot of them are in the kind of pompous and loud and demeaning, and they're just hanging on that bearish case. Like, the bulls are all wrong. China cut rates, but that was manipulation, and the ECB talked about more QE, but that was nonsense and garbage. I don't care what it is. I said this all along, and this really holds true this week. I don't give a rat's rear end what the news is. I care how stocks react. So please don't get hung up on what the hell the news is. The news is irrelevant. Who cares what the news is? Care how stocks rally on that news. That's what I care about. So hypothetically, if stocks sold off when China cut rates, that would have been a really ominous sign. That would have been like, hey, something is wrong. What am I missing? Let's revisit this. Or if stocks sold off when Draghi talked about more stimulus. And that shouldn't have happened. It didn't, but if it did, you got to really look at what the news is. So the Fed's going to meet this week. I don't think they're going to cut. Funny is, now China cut and China's market's rallying and our market's okay. The Fed, they're going to lose one of those crutches not to raise rates, but I don't think they've given us warning for this meeting. I don't think they should raise rates at all, but I do think that December is certainly more likely than at any time over the last 7 years. So with that, let me highlight one thing from Friday's trading which caused me to pause, and that is this. The Dow was up 160, S&P was up over 1%, NAS was in orbit, mids and the Russell stunk, but it's not that relevant to this comment. Not even 18 to 12, New York Stock Exchange ups to downs. That is just abysmal breadth for where we are in the rally and where the market is. It's a one-day thing. I don't want to read too much into it, but it's just something to keep not even in the back of your mind. I want to see how we react this week. This is not good. So it says to me on the very surface that market looks a little tired, but way deep, but that can be masked for a long time if you get stocks like Microsoft, which is in every index, in orbit. And Apple had a pretty good day on Thursday and Friday. Trying to think what else had big days. Did Boeing, was this week with Boeing? Yeah, Boeing had a good day on Wednesday and Thursday. UTX had a couple of good days. So the biggies can mask some of the weakness. Just keep it in the back of your mind. Let me bomb through this. Here's the Dow. All right, I'm going to make the same comment for the Dow, the S&P, and the NASDAQ. They've recouped the whole crash period. They look pretty good. They're certainly extended. I mean, one rally, one sell-off, a bigger rally. So I'm sure the Elliott wave idiots are probably saying, this is 3 waves up, A, B, C. I'm not an Elliott waver, but I know that the Prechter Group, who've been bearish since 1987, will say, "Yep, here it is. This was 5 waves down, and now we're going to rally, and then now we're going back to Dow 4,000 or something." But I mean, this Dow is a guys will start to buy based on that, which is kind of a head scratcher to me, but it's people's modus operandi. Here's the S&P. Looks almost the same thing. We're back into the same range we had all year long. We've recouped that 5-day crash, and now we're in no man's land right now. Again, we're stretched. And the Qs, little stronger, but they too, we get a ginormous gap right there that should get filled. I'm going to say sooner than later, but I have nothing of high conviction to base it on. So those are the 3 really strong indices. The small and mids, or the SMIDs, pretty much suck, which I'm kind of glad that I own them now. Here are the mid caps, and I think Tiny calls this a stealth consolidation. They're under the 89-day exponential moving average, and they're still under the September high. So one of 2 things are going to happen this week, right? One is the SMIDs are going to play catch-up, and they're going to blast out of this pattern to the upside, which is where I lean. Or if they cannot get going to the upside, they probably pull back 2 to 4%, which I don't think, but it's possible. I own the SMIDs, so I am certainly on the side, and I own the Qs as well. I may sell some Qs to buy some more SMIDs, but they look like they want to break out to the upside and try to reach up to the maybe the 200. I don't know. And the small caps suck too. They suck even worse. Kind of like my Dallas Cowboys since Romo and Dez went out. They've sucked for is it 4 games or 5 games, but they suck even worse now. And I don't blame Romo and Dez. I mean, Matt Castle put up enough points there to win. Their D and special teams was awful. So in any case, here's a Russell. It sucks too. I have said for a couple of weeks, I thought given the Russell took out these lows, I thought the initial run would be a whole lot more dramatic to the upside. Then the Russell would back off and the other indices would take over. I'm clearly wrong on that. It is not. It's been a terrible laggard. So could it reach up to the 200-day? Yes. That'd be a nice spot for me to do some selling, getting above the September high, reaching up to where people are going to look to buy. Right now I'm sticking with it. We'll see if I'm right or wrong sooner than later. Europe, which I still own in decent size. Europe's probably somewhere in the middle. We're right around the September high and hanging out. Looks okay. Still a little sloppy, but it looks okay. Another group that I'm going to target the 200-day to sell some. And the emerging markets look a little better. I said I was going to be very slow and wait because the decline was so substantial. And I think, at least from my view, I've waited long enough. And I'm looking at some emerging market countries to buy right now. China. I'm going to use that word hope, which is the worst word in investing, but I had hoped to buy China under 30. I wanted to see a full 50% decline. Didn't materialize yet, and I'm not stupid enough to just hang my hat because I think it should happen. So this is on my radar screen to buy and a little bit of weakness. FXI, as is, Western play to China, which is Hong Kong, a little stronger, but I'll still look to buy that into some weakness. So those are two. I know you guys are going to ask me for Russia, and I said it looks fine for a trade. I still think Russia looks fine for a trade. Brazil, which we talked about over and over and over again, a little disappointing the last 2 weeks. I would have thought maybe a little bit stronger, but the dollar's gotten stronger. That's been a little bit of an anchor. I'm not going to give up on Brazil yet. But I certainly don't want to see much more weakness in Brazil. So those are the major indices and the emerging markets. Let me just do a quick pause and let's see. I'm trying to find some questions. What do I think about? Oh, I'm going to get to Mike. I'm going to get to the Sox in 2 seconds. So hang on to that. History says, yeah, Bill. I know it sees. Everyone knows that the seasonally strong period began. I know we talk about the 6 months beginning November 1, but it's actually the 3rd week of October. So we're in that seasonally strong period, and the Russell should rally. Let's see. Oh, I noticed that Johanna. Any European country? I did not. To be candid, I didn't review any of the countries this week, Johanna. Europe, but you asked about the skew index. So I got to remember to answer all my questions that I've been derelict to do. So the skew index, I spent some time on, and I know it moved out even worse this week. But I did because Johanna, you kept asking, and I didn't want to ignore you. But I had IT hell at work. My assistant's computer was really, really slow, and I thought it was, maybe some kind of malware, blah, blah, blah. So my IT guy came in, and we had a bunch of computers that were problematic, and next thing I know, her computer is dead. So I'm like, he put a virus on it. What is he, a knucklehead? So it turns out, I said, you know what, it's not a virus, it's a motherboard. He said, well, why do you think so? I said, you're the expert, I hired you. So in any case, her computer died, and it's been 3 days. I got nothing done in the office, which is absolutely terrible. Oops. I'm just killing time while I fix my SKU index chart for Johanna. Okay, here we go. So the SKU index, here we go. It's on stock charts for free. This is a record high in the SKU index. A SKU index essentially measures tail risk, or fat tail risk, or black swan events. Right? So I know you guys have heard, maybe you haven't, Nassim Taleb and the black swan guy, blah, blah, blah. I'm not a big black swan person. I like to play, I guess I don't like to play for those unlikely 5 sigma events. I like to play for things that happen with regularity. I think it's a hard business model to play for disaster. So here, this is a record high in the SKU index, looking for some kind of fat tail event. I've spent a lot of time reading people's interpretations. Some people think that, and I'm not, these are not my opinions. I haven't looked at it enough to offer an opinion, but some people think that we've got a fund in trouble that's people are latching onto. I don't know. And this is a peak up here in the market too. I don't know. I'm pointing out what I discovered. So it's something to keep an eye on. This has never been seen, this kind of action before. So big fat question mark. Did a nice job down here at the bottom of picking the bottom of the stock market. Up here, not so much yet. But Johanna, that's what I learned. Somebody else asked me for live cattle, lean hogs. You know, I spent some time on the chart pulling it up, but I don't like how the chart looked. How when we roll contracts, this is too hard for me to even analyze. So there's lean hogs, and live cattle is not so much better. So I have a tough time looking at this. I did spend time on it, and I realized that I shouldn't be commenting on it. So that was that. And then I did some work on the coffee and Starbucks correlation, which I'll get to in a second. So I did get to some things that I've been lazy to do. All right, so let's dive into the sectors. My 4 key sectors, up from 3. Here are the stocks. I've said it since the August bottom. You got to watch the stocks closely. And this first rally had me convinced that the stocks were no longer a disaster. They were at least going to trade on par. They rallied very hard from the low to the September peak. You had a nice secondary low, and the stocks just ripped the shorts. I love this. I love when I'm bullish and the shorts get their faces ripped off. That's a nice move in the stocks. I will go out on a limb and say not only are the stocks, no, that's all I'm going to say. I think stocks go back to yearly highs, going above 100 in the stocks, and that's good. So we got leadership group number 1 is bullish. Transports. You know, all year long we've been worried that they've traded horribly since the peak in November up at 168. Okay? And finally, after the correction, guess who stepped up? The trannies. So they are also a little stretched like everything else. You get a little divergence here too. So they're a little higher. But trannies are stepping up. Don't ignore the trannies. I put them mildly bullish. The banks had a nice day on Friday. The banks, lo and behold, I said it for a couple of weeks. I think they're going above this peak, and here we are right there right now. I think the banks too, I think they're going to new highs. So We're 3 for 3 in the sectors, and let's throw in the easiest one of all. I've been talking about it. No one should be surprised that consumer discretionary has been this good. They've been dynamite. Friday's action, clearly exhausted. I mean, they are about from 66 to 80. They're exhausted, but the whole world left these guys for dead, and I kept saying, except for last year, there's been no reason to leave them for dead. So you got 4 sectors that you can buy into any bit of weakness. I think they all look good into weakness. 4 key sectors, or all 4 look good. Software we talked about for a couple of years being leadership. Guess what? After this big 15-20% decline here, they're right back at new highs again, or close to new highs. Another one, buying the weakness. Even telecom is stepping up. Oh my gosh. They also look decent. Again, most of these stock sectors look the same. They're very stretched in the short term. The intermediate term, they're all stepping up. Really good signs. Diversified financials, not as I lost my train of thought, but okay. Diversified financials. Oh boy, I forgot what I was going to say. In any case, they're into the moving averages. They're fine. Nothing great, nothing bad, but they're fine. Retail, I do not like. They're a subsector of consumer discretionary, but they pretty much suck right now. To me, I don't know anybody who owns them, but if I did, they got this week to step up and get above these peaks, or you got to get out. Something that's not trading. You're getting into holiday shopping, and these things stink, so I'd be very careful and cautious. Housing, home builders. I've liked them all year. I'm disappointed that they're really lagging right now. They too must get off their arses and get going to the upside, and it's got to be sooner than later. XLI, the industrials, really stepped up. So here's amazing that when the dollar rallied last year and the big multinationals were struggling, everybody said, you know, God, they can't rally with a strong dollar. And I kept saying, you're wrong. It's not that they can't rally with a strong dollar. That strong dollar caught them off guard. But they certainly can rally because they can get used to a strong dollar, just like airlines can get used to high oil prices. Well, the dollar was dynamite last couple of days. Dynamite. Yet, these guys rally. I mean, more media misconceptions and nonsense. It's amazing. You never see a guy in the media running an employee of a financial channel. You never see them going to run a successful mutual fund or hedge fund or money management firm. They can talk about it in theory, but in practice, there's no shot. So this dispels all those myths that the dollar and XLI can't rally together. It certainly can. XLB, Tiny, I think, would love this. Coming out of this nice consolidation and boom, breaking out to the upside. This group I've hated all year, but you can't ignore the fact that this is definitely bullish action and things should go higher. So this is no buy weakness. You got a lot of sectors that are buy weakness. XLE and OIH, I own both. Now, maybe XLE looks like XLB. It's a nice little consolidation. And I think it resolves itself to the upside. OIH, same thing, a little weaker, but I think this resolved itself also to the upside. On a break out of this pattern, maybe towards 34, I'd take some profits. No reason to hold on to it, but that looks good as well. Healthcare, which I do still own in a little bit smaller size, just sucks. I mean, healthcare looks terrible. Yeah, you had 2 okay rejections down here, but I mean, this sector is trading really poorly. And I've said it for a number of weeks. I own it. It's been trading like the death knells here. So I said it last week. It's time to move on, and I am moving on. Along with biotech, same thing, even weaker. Yeah, it stepped up Friday, big deal. This is just not the epitome of health. This is the Hillary Clinton decline, and we can't even get off our rear end. So it's another one that I think is time to move on. I still own some, but clearly time to move on there. Let's see, REITs, the defensive group. Here are REITs. Terrible day on Friday, right? Bearish engulfing pattern almost. Terrible day in the REITs on Friday. Question will be how much downside can the bears muster? But that's a terrible day on Friday. The Utes, same thing, even worse day on Friday for the Utes. And XLP, also defensive. Not a great day on Friday, not awful. You can't be surprised given that it was challenging its highs right here. So we challenged the highs. We're pausing. Now this is one you pull back to 49.50 to 50, somewhere down here is a screaming buy for another rally. Those are the major sectors. You guys like TAN, the solar, which I said is fine to own. To me, it still looks fine. It's been so crushed. There's nothing anything wrong yet, so it still looks okay to me. Internet, which I started calling a couple weeks ago that I liked, had a monster day. No surprise on Friday with Google, Alphabet, Amazon. I hate this chart because freaking idiots have this. Oops, let's go to the RIDEX Internet Fund. Yeah, I mean, this thing looks like any pullback is buying opportunity to go to 85 to 90 on the internet sector. And finally, gold stocks. I don't have a significant opinion on gold stocks. I like the metal better, but this doesn't really, this is a little sloppy for me. So no opinion on the gold stocks. Any questions on the sectors? May, on the home builders, I just said that they're disappointing in their lack of rally. They're one of the laggard groups right now, along with my healthcare and biotech. So I think they got to step up now or forever hold their peace. Insurance, Johanna, let's see. KCI or KIE? KIE. Here's insurance is taking all the storms and stuff in stride. We'll see tomorrow morning with all these Texas floods, but this group's trading great, and on the surface looks like it wants to go see new highs as well. Oops, I just clicked on the wrong button. Hold on a second. Okay, Rick, I'll get to J and K in 2 minutes. What's the symbol? Oh, Brian, XLY, X-ray Larry yellow, Brian, is a symbol for consumer discretionary. Scott, I don't know if the Fed's is flood insurance because it didn't hit a coastline. I mean, Dallas is not, I don't think, has that federal flood insurance. I'm not an insurance expert, but that'd be my first comment. Well, with Gilead, Amgen, Celgene at the report, you don't think IV will get a big bounce? Scott, I don't know. It's not that I don't think it could bounce. It's the market is telling you something. So whether earnings are coming out or not, I mean, this is really crummy action. And I'm not saying just because I own it and I'm disappointed. I'm telling you, this is just really crummy action. Could it get off its R's? Sure, it could break out and run, but that's just terrible action. This was the key. I think we're just consolidating this the second crash. I'm really disappointed. All right, let's move on. Let's go to, there's the skew for Johanna, and let's go to the NY, the AD line. Looks as good as it did, only better from last week. We're getting good participation overall in the rally. Will the AD line go to all-time highs again? Question mark. If it does, then it forestalls the bear market, which is, I know some of you guys love to be bearish. I don't. It's much easier to make money in a bull market. So I hope the AD line goes to all-time highs again. It makes it easier to make money. But if it doesn't, we will address that when we get there. Let's see. Let's go to junk bonds, which we talked about for a couple of weeks. I am really encouraged and pleased that junk bonds stepped up, and not only because I own a huge position in it, but because it's good for the market. So junk bonds collapsed, and a lot had to do with the oil and metals, but this is a really powerful rally we've been in. So I'm happy with that because I own J&K in big size, and I think it goes higher. Maybe pull back 0.5% or so, but I think on balance, J&K is going higher. And I also own the PIMCO High Yield Fund, and that's had a beautiful rally too. And I've opined for several weeks that perhaps this is the rally that gets us into 2016. The junk bonds just rallying to 16. That'd be really bullish for stocks. So we'll see if it happens. And finally, a tease. So those of you guys and ladies who took Tiny and my course in, I forgot what we called it, market timing or something, or market timing indicators. Here is the McClellan NYSE ratio adjusted summation index, the McClellan ratio adjusted summation index. It's at 373. Go back to your notes. Very, 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 very underscore important right now. We're reaching a critical juncture. Okay. Now let's go on to move this thing over here, and let's go on. I am leaking oil and getting exhausted. Okay, let's go to Treasury bonds. I've been neutral because I don't have conviction here. I think it could go either way. Last week did nothing to change that, so I'll just leave it alone and move on. No opinion on treasuries. The dollar, which I've been bullish on all time frames, had after a nice consolidation, it had a bust out end of the week. I mean, huge on Thursday and Friday, the dollar. Huge. That is really strong. FXE didn't get as crushed as I thought. Lower end of the range. It's kind of do or die for FXE right now. FXY came down, now we're the bottom end of the range, kind of the same thing. Longer term, I think FXY goes down another 50% and FXE goes down another 20%. Short term probably goes either way. We're at the bottom of the range. Bulls will have to step up immediately or else sayonara. Gold, let's spend a couple minutes on gold. I have not been enthused with gold lately. However, given the dollar's strength on Thursday and Friday, gold barely declined. So remember I said I don't care what the news is, I care how things react. This is pretty positive for gold. So I'm not telling you that it's going to go up $100 tomorrow. I'm telling you that this is an orderly consolidation off of a really nice rally, and certainly if gold's going to get going, it could be right now and break out to the upside and go on a $100 run. So I'd keep gold on the forefront of my screen. I think the trade is to the long side right now in gold. Crude. So here's what I'm having a very tough time. Last week I said if crude goes down much more, it breaks the kind of strength that I thought in here, and you'd have to think it's going to head back towards the lows. All right, so what did crude do? It sold right off. All right, no problem there. The problem is XLE and OIH look a whole lot stronger, and I didn't do the work on which one normally wins, but crude oil itself, to me, did not and did not look good. natural gas, talk about a decline again. We've been watching this, what seems like a couple of years. Here's the weekly chart. Smart money's been locked and loaded long, and I've said all along, you got to be patient. Let this thing play out to the downside. It's now breaking down again. Eventually, it's going to bottom. We'll try to nail it and make a few dollars, but it's not cooperating just quite yet. And copper's been, no, I'm wrong. There's another commodity coming up. Here's copper. Yeah, I would lean to the long side. I think, maybe the 200-day moving average, or at least above this peak, is where I think it could go. However, I don't have a strong conviction on copper. Let's see. All right, let's go to the ags. So given the dollar strength, you would think the ags sold off a lot. Here's wheat. Thursday and Friday certainly did not get crushed. This doesn't look bullish, but it didn't get crushed. So I don't really have a strong opinion on wheat. There's corn. Also did not get crushed. Kind of just treaded water. That's a positive sign that it's taking the dollar strength in stride. Corn I like a little better than wheat. That one I think could support a rally towards the 400 area in corn. And beans, what do beans do? Nothing. So beans and wheat, question mark. Corn looks the best of the three. Sugar, we've talked about over and over and over again since this low. Beautiful bottom in sugar, monster rally. Here's what's of interest. Beautiful consolidation. We break out of the consolidation, and the next day we collapse. So Thursday, great. Friday sucked. What do you do with it? Well, if you're looking to be long, you take a shot to the long side right now with a very, very, very minuscule stop. It's got to rally immediately. If you're looking on the short side, you perhaps wait for a run into the middle of the candle, a rally. You put a small stop in above, and you make it so your risk both ways is really small right now if you want to trade it. Cotton, on the other hand, had a terrible day on Thursday. This is the one that got me when I said during this rally I thought you could sell into it, and then this big day would rip my face off, which clearly it did. Went into a consolidation. Now I think you can go back and short this again. I think this cotton's on its way down again. That candle Thursday was pretty significant. Here's cocoa. I have no opinion on cocoa right now. Last week I thought we could get a rally. What did we get? We got a couple days up and a couple days down. I don't have an opinion at all on cocoa. So Starbucks, here's Starbucks. All-time highs. Been on a monster run. And here's coffee, which is sold off lately but doesn't. So I finally did do some work on the whole coffee-Starbucks relationship, thinking intuitively it should be perfectly inversely correlated. Coffee goes up, Starbucks goes down. Here's what I learned. Except for the last couple of years, there's no correlation at all. It's not inversely correlated, and it's not correlated. So what we think makes sense intuitively doesn't hold up to scrutiny when we actually do the research and the factual work. So you can throw that idea out the window. Let's see. So we did J&K. Let's see. There are too many bears for the market to tank. They are now digging up a Gartley pattern. Where the hell did of this crap? Scott, I don't think there's too many bears. It's funny. I don't think there's a lot of bears. I just don't think there's a lot of bulls. To me, it seems like there's a lot of people. What's in between a bull and a bear? I don't know what it's called, but I think you got a lot of people scratching their head, confused. So the Gartley thing, Tiny turned me on to it. I never heard of it, but I'm not the chart aficionado or the technical analysis aficionado that he is. But I did read about it. It's kind of cool. I just thought that it would get blown out to the upside and it would never trigger to the downside. So they're always pulling up something. And remember, don't forget, which means remember that you get a lot more props and a lot more play in the media if you make bold, really negative predictions and comments. The powerfully bullish stuff, people, I produced all these studies from the crash low. You know, crashes that go down 10% in 5 days, markets almost always up 6 and 9 and 12 months later. I couldn't get a single bite in the media to show that research. My post-crash behavior got a lot of attention, but that was because I used the word crash so much, and that too said we're going to new highs. And then what was my other study? Oh, then my August and down September's equal a 10% up fourth quarter. Nobody wanted to let me talk about that. It was too bullish. So they want to talk about all the Gartley stuff, be my guest. Scott, I remember I told you there was no correlation. Yes, Scott, you did. But you had to go do the, like I had to go do the work. I don't doubt what anybody says, but I need to look at the numbers myself and go, okay, that's true. It does not bear out.
Don't doubt the Gartley.
What?
Don't doubt the Gartley.
I don't doubt anything, but to me, you got to do the work to make sure it confirms or doesn't confirm your thesis. I don't doubt. Oh, wait, listen, you know this. When it comes to ego in the market, I may have an ego in life, but I'd much rather make money than be right. I'd rather be wrong every day and make money, and have my clients make money. There you go. Adine, if you had to pick, would you rather be long the dollar or short the euro? Depends on your time frame. Anything more than a couple of weeks, I'm going to be long the dollar. And the dollar's going to go a whole lot. Oh, long the dollar or short the euro? I see your question. Probably long the dollar. I think because you spread your risk out a little bit. So I'd rather be long the dollar than short the euro. So let's see, Scott. A bear gets a shotgun. A bull gets a sword. Yes, that's true. So what about the neutral guys? They get neutered. What do we call them, neutered bulls? Steers? I can't remember. I'm operating even less capacity than normal. John, do I think this explosive stock will prompt the Fed to raise rates? I don't think it will prompt them to, but I think it makes it easier for them to raise rates. There's a difference. They want to raise rates. We all know that. Okay? Fed wants to raise rates. They're going to raise rates. It's going to be a mistake, but they're going to raise rates. Let's see. Scott, you're boycotting Charles Payne. He's gone to the dark side of ratings. He did call. Why has he gone to the dark side? I have not been on, and I'm sure they don't like me anymore because I've not been to the city. But let's see. Okay. Can you look into Jesse? I did some work on the meats. I mentioned it early on. I looked at live cattle. I looked at lean hogs, and I didn't look at feeder cattle. But here's the problem. I went back, then the other ones look the same. I don't get good data, which I don't think is the case, but because of the contract roles, it makes it really hard, and I get no research on this to even learn about it. It makes it really hard for me just to look at this and form an opinion. I'm always happy to let Tiny offer a pure chart opinion, but I have no kind of background, foundational knowledge, and what I look at here is just really, really sloppy stuff. So I can't, not that I can't, it's just really, it'd be stupid for me to offer an opinion that would basis your trading at all. All right. Thank God I'm done. Any other questions, comments, concerns, quibbles? So now I can go crawl up into the fetal position in bed. Oh, not only did my assistant's computer wet the bed, my wife's computer. Last time my wife's computer wet the bed, I paid some guy to go pull all the data off her hard drive, and I bought her a terabyte, backup drive for whatever, $75. And she said, okay, I'm going to start backing up. Well, today her computer does not boot up, and I said, well, you got a backup. She said, oh, no, I haven't backed up since May, and I have all this stuff on there. So I give up. But I repeat the four. Let's see, yes, yes, and yes. So here's silver. If I can. Here's silver for, I think Johanna wants silver. I like gold better than silver. Let's just do GLD divided by SLV. Yeah, I like gold over silver. And I usually do. I'm kind of, silver confuses me. Well, most things confuse me. In the 4 key sectors, somebody asked, was that Mike? Mike, do you want to know what they are? The 4 keys, the semis, the trannies, discretionary, and banks. You want to know how I view them, Mike? Yeah, they all look good to me. The semis, which Tiny and I have been discussing for a while, I thought they were coming back from the dead here. They did come back from the dead. By weakness, I think they're going to new highs. Trannies also, I said, could come back from the dead after the crash. They had a beautiful rally. This told me they were coming back from the dead. Secondary low is much higher, and I think trannies are going to go higher into year end. I could see a 10% rally in the trannies. Discretionary, we've been on all year. No surprise here. They're a sniff from all-time highs. I think you buy weakness again here. And the banks, even the banks look good. Not as good as the others, but banks look good to me. So all 4 get the bullish check mark along with high-yield bonds. Frank, what was your question about S&P 500? Post it again. I don't see it. And James, the data's not lost. Oh, no, yeah, James, I know. I'm going to have my IT guy. You know what? I got to find another IT guy because I don't have confidence in what's going on. But yes, I'll bring the hard drive in and let him pull it off and grab my wife's data.
We got to wrap it. We got to wrap now. We got to wrap
What?
it. We got to wrap it. I got to reboot my computer, and I can't leave until you stop. So.
All right, guys. Everybody have a good week. Thanks for coming. Tell your friends. Tell your neighbors. Tell your mailman, as Tiny says.
Have a happy Halloween. Bye.